This exercise, we're going to do more review regarding the reporting and analyzing receivables. So we're going to go through a bunch of transactions again for this Orient Retail Corporation and then try to work out some journal entries. This exercise will be also introducing to you about the different modes of collections because customers can usually pay either by cash or credit terms or credit cards or even debit cards. So let's take a look at a question quickly. So during April, you have these following transactions for Orient Retail Corporation. So for April 1st, they sold $7,600 worth of merchandise for cash, and the cost of goods sold was for $4,600. Okay, so in this case here, on April the 1st, the cash sales is $7,600. So I need to debit cash for $7,600. And I would need to credit sales for $7,600 because that's how much sales I actually make for that period. And then my cost of goods sold is $4,600, and then you'll be crediting inventory for $4,600. And for the next transaction, on April the 7th, they sold merchandise of $13,600 on Orient Retail credit cards. The cost of goods sold was $8,000. Now, this is a credit card actually issued by the company, so they would have to be responsible for the collection of this money here. So basically speaking, it would be a form of receivables that they would have to account for. So I would, on April the 7th, I would debit the credit card receivables because that's the money they have to still yet collect. And the amount is $13,600, and you would credit credit sales for $13,600. And again, the cost of goods sold that was given to you was $8,000, and I would credit the inventory for $8,000. On April the 12th, they performed services for $3,400 paid with MasterCard credit cards, and the credit card company charged 3%. Now that we're paying through credit card, the credit card is actually a form of cash as well, but because the credit card company is charging you for the discount, for the service charge, we would need to account for that as part of the cost of doing business. So on April the 12th, the cash that I should be receiving from the credit card company would be the full amount of $3,400 less the credit card charges they're going to charge you. So that would be $3,400, and the credit card charges is 3%, which came up to be $102. So that means that your total cash that you receive is $32.98. So we need to account for the credit card discount. Now, credit card discount could be treated as a contra account against your sales, or it can be treated as an expense as well, depending on how the company chooses on that practice. So in this case here, we are putting it to the credit card discount, treating it as a contra account to sales. So in this case here, we would have to debit 102. And then we will be crediting the service revenue for the amount of $3,400. And on April the 12th, they sold merchandise of $4,400. They paid with the American Express credit cards, and they gave you the cost of goods sold of $2,640, and the credit card charge was 5%. Very similar to the one that we just talked about earlier. So we would have to, the cash would be netted off the credit card charges that we are receiving from the customer. So it's April the 12th. So the cash I'm receiving will be based on $4,400 minus the credit card charges, which is $4,400, multiplied by the 5%. So the net cash you'll be receiving is $4,180. And the credit card discount, which is based on $4,400 times 5%, equals to $220. So my sales equals to $4,400. And then my cost of goods sold in this case would be $2,640. And then I would credit the inventory for $2,640. The next transaction on April the 18th, they performed services for $4,000 on account, terms 110 net 30. So they're getting some credit terms to pay for their services that they have received. So you would be debiting so this is on April the 18th. You'll be debiting accounts receivables because you will be giving the credit term and you'll be receiving that money later for $4,000 and crediting the service revenue for $4,000. They sold $5,600 on April the 20th of merchandise to customers who paid with their debit cards. The cost of goods sold was $3,400 and the debit card charge was 2%. So the debit card will work very similar to the credit cards. Again, it's a cash payment, except that you would have to account for the debit card charges, just like the credit card charges that was given. So the amount of cash you'll be receiving would be netted off the debit card charges that was being charged out by the bank. So this is April the 20th. So again, I would debit cash, and it's $5,600, which is the value of my sale. I would need to deduct the debit card charges, which is 2%. So my net cash received is $5,488. And then I would have a debit card discount, which is 112, and my sales is going to be $5,600. And then I will have to take it to the cost of goods sold, which is $3,400, and crediting inventory for $3,400. On April the 27th, collected amount owing from April 18th transaction. So if you take a look at it, it's within the discount period because they get 10 days to pay. If they pay in 10 days, you'll receive the 1% discount. And this is transactions on the 18th, and you are actually paying on the 27th. So that's within that discount period that we have to account for. So on April the 27th, you will need to debit cash. Again, the cash will be reduced by the discount the customers will be paying you, and it's based on $4,000. So the customer will be taking the cash discount. So the amount of cash you're receiving is actually $39.60. And I will need to debit the sales discount or cash discount, which is the $40, and crediting crediting accounts receivable, because that's how much you are paying for the receivables that was incurred earlier. On April the 30th, they added $300 of interest to overdue Orient retail credit card account holders. So they're actually charging interest to their customers. So that increases their receivables that they have accounted for. So in this case, on April the 30th, they will need to debit the credit card receivables by $300, and they would need to credit the interest revenue, because that's the interest they have earned on the delinquent accounts that they might, or customers who may not be able to pay them on time. And the very last transaction, they submitted Orient retail credit card slips accumulated to date to the credit card division for payment. This transaction has no financial implications, because they're just submitting these credit card slips for payment. They have not either received or cash or pay out any cash in that perspective. So as a result of that, there's no entry required for this entry. This concludes this question, and thank you.